Hey everyone, welcome back to Corporate Dakota, the place where we untangle the financial mysteries of the world. And today we're diving into Star Bulk Carriers Corp's latest filing. And let me tell you, it's a bit of a roller coaster, sort of like their business of shipping goods across the ocean. So what's the big news from Star Bulk Carriers Corp? Well, this filing is essentially their check-in with investors, a look at how they're doing financially and what's on the horizon for this big shipping company. Alright, let's get straight into the nitty-gritty of their business. Star Bulk is all about moving bulk stuff like iron ore, coal, and grain all over the world. They've got a huge fleet of ships, and this report gives us a peek at how that fleet is performing. Check this out, they have a massive fleet of 142 operating vessels. That's a ton of ships constantly sailing, and a big chunk of them, 97% actually, are fitted with these special systems called exhaust gas cleaning systems or scrubbers. These are important for environmental reasons, kind of like putting filters on a car. But here's where things get interesting. They are selling off some of their older vessels. In fact, they've agreed to sell 8 vessels in total during the second half of this year. This is a pretty common strategy for shipping companies to keep their fleet modern and efficient. And it's not just about selling old ships, they're also building new ones. They've got 5 new Kamsarmax vessels on order, expected to be delivered between 2026 and 2027. These are like the newer, more fuel-efficient models of ships. They also charter in ships, which means they rent them from other companies for a bit. Right now they have 8 vessels on long-term charter, and this helps them meet customer demand without having to own every single ship. Now let's talk about the money. Companies need cash to operate, right? Star Bulk has about $408.20 in cash and easily sellable investments as of August 2025. That sounds like a lot, but remember they have bills to pay and ships to maintain. They also have borrowings totaling over 1.1 billion Rs, so they have debt, but they also have quite a bit of cash on hand. And for those who own shares, you're probably wondering about dividends. Star Bulk has a policy to pay a minimum quarterly dividend of $0.05 per share. They recently declared one for September 2025, so they're sharing some of their profits with their shareholders. Let's crunch some of the financial numbers they reported for the first half of 2025 compared to the same time in 2024. This is where things get a little murky. Their time charter equivalent, or TCE rate, dropped significantly. In the first half of 2025, it was $13,034. In the first half of 2024, think of TCE rate as the daily profit they really make on each ship after covering certain costs. So a big drop here means they're making less money on each sailing. This lower profit per ship is reflected in their overall revenue. Voyage revenues fell from 612 to 403 million 2024 to $478.1 million in early 2025. That's a pretty substantial drop, showing that the shipping market was tougher during this period. Their costs for chartering in ships also went up, nearly doubling to $33 and $2 in days. Plus, with a larger fleet, on average about 149 ships in the first half of 2025 compared to 134, their everyday running costs like crew, insurance and maintenance went up too. And get this, their dry docking expenses, which are for the big maintenance and inspections ships need every few years, more than doubled to $45.7 million. This is because more ships went into dry dock during this first half of 2025. All these factors, lower shipping rates, higher operating costs, really hit their bottom line. Their net income for the first 6 months of 2025 was a tiny $501,000. Compare that to the $180, $930 $80 mined any profit this period. However, there's always a bit of complexity with financial instruments. They use things called interest rate swaps to manage risk on loans. And even though their net income was almost zero, some of these financial instruments had changes in their value that ended up in something called other comprehensive income, which is a separate way of accounting for certain gains and losses. When we look at the actual cash generated from their operations, it also took a hit. Net cash from operations was $103 million for the first half of 2021 to $56.9 million in the same period last year. This confirms the tougher market conditions they talked about. Their investing activities were much lower too, mostly because they sold fewer ships in 2025 compared to 2024 to get cash. And in financing, they used less cash compared to last year, partly because they paid out much smaller dividends. Let's quickly look at their balance sheet, which is like a snapshot of what they own and what they owe. Total assets are down slightly from about $4.1 billion at the end of 2025. This reflects the ship sales. Their total liabilities also decreased from $1.6 billion to $1.5 billion, which is good to see. And shareholder equity, the net worth of the company, has gone down to a bit from $2.05 billion. This also ties back to lower profits and dividend payouts. But it's also worth noting they have a number of financial derivatives like interest rate swaps and forward freight agreements. These are used to manage risk, but they can also create volatility in earnings. They did mention selling off some subsidiaries in Cyprus and Germany, which is probably part of their strategy to streamline operations. Looking ahead, they've made some moves after June 30th. They continued selling ships, terminated some of those interest rate swaps we just talked about, and they've authorized a new share repurchase program. This means they'll buy back their own stock, which can sometimes boost the stock price. So, what's the story here? Star Bulk Carriers is navigating a really tough shipping market. Their revenues and profits have taken a significant hit, especially when you compare it to the strong performance in early 2024. While selling older ships and building new ones is a smart long-term move, it doesn't immediately solve the problem of lower charter rates that are hurting their current earnings. They seem to be managing their debt reasonably well, and the dividend is still in place, which is a positive sign for shareholders who value income. However, the sharp drop in net income and operating cash flow is a clear warning flag that the company is feeling the pressure of the industry's downturn. They are exposed to massive risks from fluctuating global economic conditions, geopolitical events, and the ever-present volatility of shipping markets. Alright, that's a breakdown of Star Bulk Carriers' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.